continuous drumbeat of disappointing economic news out of China, combined with a feeble policy response so far, has forced investors to sharply lower their short-term expectations. And with demographic, debt, and deglobalization headwinds gathering strength, the long-term outlook has also worsened. Let's take a closer look. When China's government unexpectedly decided to discontinue its zero-COVID policy, investors expected a robust economic recovery. However, after an initial bounce, the recovery quickly lost steam and morphed into what is now a deflationary slump, with a weak real estate market playing an important role. A lack of trust in the country's most important economic engine has meant consumers have held off on spending and companies have hesitated to invest. Even more, the Chinese government is not nearly as aggressive as it's historically been in boosting confidence and stimulating growth. Concerns around large amounts of outstanding debt and the stability of the banking system have made it cautious, with only incremental support coming through. Combined, the short-term outlook for China is challenging and further disappointment is likely. Unfortunately, the long-term outlook for China is not that much better. The debt overhang that is already holding back growth is likely to push the country into what is called a balance sheet recession, where the private sector collectively focuses on paying down debt versus consumption and investment. We think that only aggressive action by the government to write down bad debt and restart the credit cycle can alleviate this headwind, but that requires the political will to do so. And in the meantime, other long-term trends such as an aging population and deglobalization will still act as headwinds. The latter is already painfully clear in the weak trade and foreign direct investment numbers. We don't think China will find an easy way to overcome its economic troubles. Aggressive action by the government could improve the outlook, but in the absence of proof that such action is forthcoming, we remain cautious. In our global policy model that guides allocation in Northern Trust portfolios, we hold a tactical underweight to emerging market equities, in which China holds the most weight, given the weak short-term outlook. We also recently reduced our long-term strategic allocation to the asset class.